So NVIDIA's earnings are on the horizon this Wednesday, and there's a few things you should look out for if you're a bull or a bear on the overall market. Now, right now, it's Monday morning. We're in the market open, and we're getting a little bit of love to the upside after coming down from a big pump on Google, which is now reverting to the pump, making a new all-time high. So there's a lot of hype going into the market this week. Keep in mind that this week we'll also have OPEX on Friday, but I'm going to tell you guys why and what I'm personally looking out for here for this week and through to the end of the year. Now, although it seems like a very rough time in the market, and it might be when we look at how SPY is sitting right now, right? We're not having this kind of market that we've had where we just kind of more than likely just go up to the upside. We find support at the 21 EMA and just continue bouncing higher and higher and higher. But it's been a little bit more rocky here. And what I find very interesting about the SPY and where it's positioned right now is not only where it's currently positioned, but where volatility is positioned and where the fear and greed index is positioned right now. Now, I wouldn't necessarily use the fear and greed index as a means of hanging your hat on something super important, but it does give you an inkling on how the market, again, obviously, is feeling. And when we see a very high fear rating, the market doesn't tend to be like 2% from all-time high. It's very bizarre. What else is bizarre is where the VIX is currently sitting. The VIX right now, at least on the day, sitting about 20, which all things considered is a bit high for the market. Now, through Trump's presidency in general, the market likes to float around a 14 to 15 VIX, maybe even getting into the 17s at most, right? We get pops and comes back down. But if you don't believe me, you can go back and look. Obviously, this is zoomed out and we get our big volatility pops and whatnot. But the market finds when it just kind of rallies to the upside, it's comfortable around again, 14, I'll extend it to 17. So the $14 to $17 range. And if you want to go back to Trump's last presidency, you can see that as well. That's kind of where volatility likes to sit, where it feels comfortable. Now, obviously, as the VIX behaves, we get pops to the upside, right? When the market gets some bad news, and then that typically decays back down fairly quickly. But because of where volatility is sitting, we're saying that volatility is a little bit higher right now than the range that I'm considering it should be in. So we're at least 3 points higher from the top of the range where I think volatility should sit. Now, what does this mean? Well, when you combine that and you combine that with the fear and greed index sitting at 10, 20, it's pretty low. It's high extreme fear right now. But the market, strangely, again, only down 2%, really sparks a very interesting conversation, I guess you could say, about where people really feel the market could go or is going right now. Keep in mind what the VIX means. The VIX is your sign of price agreement or disagreement on the overall market. So the higher your VIX is, the stronger of disagreement in SPX option spreads, right? The bid and the ask are wider apart, hinting more volatility. That's how the VIX gets its value. And as that volatility comes down, as those bids and ask spreads get closer together, the market feels more certain, even to the downside, right? That's why VIX in the SPY or SPX, whatever you want to use, isn't necessarily a one-to-one correlation. It can just signify how traders are in agreement or disagreement in the directionality of the SPY. So considering that, considering where the VIX is sitting, and considering where that fear and greed index is sitting, and considering what this week is and the end of the year is coming up, what we have rolling into the end of the year, we sit at a very, very, very strong turning point, in my opinion. Now, what that turning point really is at the end of the day, in my opinion, this is a dip to be bought. I'll be very clear, and that's not financial advice, obviously, but this is a dip I'm personally buying, and it's something you should consider as well, at least in my opinion. Here's why. NVIDIA reports earnings, and I don't think there's any doubt that NVIDIA is going to impress on earnings, right? They're more than likely going to blow earnings out of the water. They're going to have great numbers. But how great are those numbers is going to really tell if we see a bull move or a bear move on NVIDIA. But I'm going to tell you why I don't care. Now, what said on the conference call matters because that's going to affect sentiment of AI. That point matters. But what doesn't matter about NVIDIA is if there is even a hard fall or a hard spike, and we're saying, I'll say 10%, right? That's a pretty sizable move for an ER. Let's say there's a 10% move up or down. Hell, let's say 20. Because of NVIDIA's weight, it's roughly about 10% of the SPY. So even if there's a 20% move, that would equate to a 2% pop or drop on the SPY, which can be substantial, right? That's going to be $12 either way, roughly. Could be a big move, right? While I don't even think that's going to happen, I think how the Mag 7 names are sitting right now, any money that is seen as, I almost want to say dead money, if there's bearish action, that money will flow into the other Mag 7 names, causing a non-event for the overall market. I think today, and when the market opened, was actually a really good indicator of this. When we actually saw Google be green, and now it's making new all-time highs, but Google was very green, was pushing up to the upside, and our other Mag 7 names were sitting a little red. Now we're getting a little bit of green here, right? We're moving up a little bit, but our other Mag 7 names are sitting red, and that could simply be rotation between the Mag 7 names, money going out of Meta, Microsoft, NVIDIA, and into Google, but the same dollar effect on the overall market is roughly the same. What you could use to support or deny that thesis is your performance on the Qs. Now, obviously, the Qs are not just the Mag 7, but the Mag 7 are the strongest weight in the Qs. And if this number continues to be flat or up, that supports that thesis, meaning people are either investing more money in large tech or Mag 7 names, or if it's flat, while one name is green, the other ones are red, that can support the thesis of money just simply rotating in the Mag 7 name. So why do I bring this up, and why am I highlighting this to you as not a risk factor, but an opportunity factor for the end of the year? A lot of people are stoking hype or fear through NVIDIA's earnings, and I think it's really going to end up being a non-event, unless you're an individual investor, of course, but for the overall market, a non-event, good or bad, mainly due to this fact. Compound that with where the volatility is sitting, compound that with where general sentiment is. The fact that we are so fearful, which we really shouldn't be, and we're sitting at such an elevated price, I strongly believe that the market is setting up for a hard rally into the end of the year. Now, through this week, we have November OPEX. We tend to see a lot of repositioning, so we may end up having a choppy week in general. Right now, we're having a pretty good session so far, but we could end up having a very choppy week for the rest of the week. That's a very likely possibility as people reposition into the end of the year. But typically, as I'm not a person who typically believes in seasonality, I will mention that we tend to see more bullish price action through to the end of the year. So what I'm kind of highlighting to you guys here is this. At this point in time, or I should say at this point in time on my chart here, going back to, May, we had a decent, pretty hard rally. We came from about 570 all the way up to 689, almost a 200-point rally, right, on the market, or 100-point rally on the market. And it mostly just went to the upside. Ever since this one dastardly 3% day on the market, it has not been as clean to the upside, right? We had these 4 gaps in a row, they filled to the downside, and now we're sitting in kind of like this no man's-y kind of land where we're right around the high of that really important Friday candle, but we're still sitting north of our 50 MA and our daily POC, our point of control here. This signifies to me, all this price action going back from the last month or so, a little bit over a month, signifies to me that we're in some level of price discovery and even arguably consolidation. Yes, that sounds crazy because we had this big gap up to the downside. We came back down. So the market is finding liquidity here, and it just takes the one move to the upside, the one push, to push it continuously to the upside to resume this kind of price action upwards. Now, the pessimist may say, well, you could make the same argument for the downside, and you could, but because of the conditions I've laid out and because of where we're currently sitting through all of the things I've highlighted here, I find that as a lower probability scenario, not only for your seasonality, not only for your VIX, not only for your fear and greed, not only for NVIDIA and OPEX, all these things I've talked about here in general, not only for just the technical point on SPY, they are 6 to 7 points that I've highlighted in this video on what would actually affect the market, what would actually push it bullish or push it bearish. And if you look at all these points, it supports a bull narrative more than it supports a bear narrative, at least at this current point in time. Now, the last thing I want to highlight to you, again, being more of a pessimist here, is taking a peek at IWM. Now, I personally use IWM as a sentiment driver. It gives me an idea of how the underbelly of the market is working, right? The top, or the 2,000 top largest 2,000 small cap names, right? Gives you an idea of, I like to think of it as the real U.S. economy, the real businesses that are working hard, because these are the companies that may not make any profit yet, right? These are the companies that need to borrow money to make money. And once you get big enough, too big for your britches in IWM, you move on to the Qs or the SPY. So you get kicked out, right? So that's why investing in IWM long terms can be a little sketchy, but I digress. How IWM's sitting here from a sentiment point of view isn't fantastic, I'll be honest with you guys. So again, if we're looking at the pessimist argument here, we're under the 50 MA, we broke under, you're forming a death cross here theoretically, but is that move overstated? I'm going to argue yes. actually. We've had a pretty hard, substantial fall from the 27th of October, which is about 3 weeks or so. And it's basically been a continuous fall. We're catching a little bit more volatility here near term, but it's looking like, not yet, but it's looking like the bulls are going to try to put in a bottom here on my LOI right here at 236.27. Use this as support to try to catch a rally to the upside. Your MACD's burnt out to the downside. You're seeing strong volume reactions at this level as well. This is kind of my trigger. So as a bear, if you want to get to look more bearishly, you want to see a high volume close. Keyword there is close underneath 236.27. If we see that, then we're more than likely going to see continued downside on IWM for about another 6 or 7 points here down to 229.42, which is the old all-time high. So you're going to want to watch that as your potential. Now, again, I am of the belief this won't happen. I'm of the belief that we'll actually see a little bit of a renaissance here in small caps and get a pretty hard rally. And keep in mind, the way IWM trades sometimes this thing gets a 3 or 4% day in one day. I mean, you can look at this candle right here. It's a down day, but that's 3%. This candle is 2% candle. This candle here is whatever it is, 3% candle. This candle is technically only a 1% candle, or 0.29. You get my point here from open to close. But IWM, this is a 4% candle. It can get a hard move both ways. So if there's any inkling of bullish narrative, if there's a bull catalyst that sparks things here, sparks excitement in the market, a 3% or 4% day, it won't take much to push IWM bullish very quickly. Then you're burning on all cylinders. Theoretically, on that move, the volatility would go down as well. Fear and greed would go back up. The market would probably push to the upside. Qs would probably continue to the upside. Those are the kinds of things I'm looking for here. So as we, I should say, in summary, looking at all these pieces, I would lean very bullish into the end of the year if you're betting either which way. I don't think now is the time, if you are a little bit fearful, to necessarily close out long positions. I'm seeing a lot of people online, on social media, talking about how they're liquidating all their positions. Things are overblown. Now people are flipping short. Not yet. In my opinion, not yet at all. I think there is a lot left in the market, believe it or not, and I'm going to say that this is basically just a cool down. I know it doesn't look like that, but considering all of the pieces of the puzzle here, that this is a cool down before we see a harder move to the upside. Last thing I'll leave you with, what I'm looking at here, again, in terms of invalidation of this thesis, right? Because I gave you basically a bull thesis into at least the end of the year. But we have to be honest with ourselves and look at both sides of the coin and what could invalidate that. The first thing I want to look for is a close beneath 236.27. You're definitely not out of the woods there. You're very close to that. That could be a sign of weakening in the market in general in terms of sentiment. The other thing to look out for in general is a close below your 50 MA on the SPY and on QQQ. Again, a daily close under these levels. Typically, I'll wait a day or two. So you could see a close under there and then a rally up the next day. But typically, I'll give it a day or two because we're looking at daily candles here and it's a daily level. But that would give you another inkling that some more fear could come into the market, some more bearishness could come into the market. The last thing I'd look for here is on the VIX. If we see, now this would be one of those signals that's like a hindsight 2020 thing where it doesn't matter because it's already happened. If volatility breaks above right here, the high line here of 2309, you're more than likely going to get a quick mark up to around like $25.50, $26 here. Well, dollars, VIX, whatever. On the VIX, excuse me, a pretty strong markup. So that would also invalidate my thesis. I also don't like, so again, if I'm leaning more to the pessimist side, I don't like that the VIX is at this current level up here around this 2035, and it needs to come down sooner than later, ideally by the end of this week. The last thing to look at is your VVIX. Now, typically the market, if it is leaning more bullish, VVIX tends to be under 100. North of 110 is where you should be a little bit more concerned. Now, VVIX measures the volatility of volatility, so it measures how volatile the VIX is. This, again, is not a one-to-one relationship. There are periods of time where VVIX could be higher, and while the VIX is moving up, because there's a high probability of a sharp reversal on the VIX. So VVIX could go up theoretically as the VIX sharply reverses because the volatility of the VIX has increased, right? That makes logical sense. So take this piece with a grain of salt, but in general, you want to see VVIX sub 100 to support that bull narrative. If it stays and comfortably stays, so I'm saying a number of days north of 110, that could invalidate the bull thesis here. So these are things to understand, but also be very liquid with, be very, take all of the pieces together to understand if things lean more bullish or bearish. Ultimately, you're not going to see a strong signal, in my opinion, until next Monday or Tuesday. We tend to see strong positioning, especially in this case for the end of the year. After November, OPEX, typically that first 1 to 2 days, gives us an inkling of how December OPEX tends to work out. So especially with NVIDIA on Wednesday and with OPEX on the end of the week here, those are the things you want to consider if you are a bull or if you are a bear on the market in general.